Nvidia stock has been on a great run for the past 2 months. The stock is up over 30% since I made this video in April, stating that this was a rare buy the dip opportunity. Now everybody knows the Nvidia growth story at this point, but with the stock near its all-time high, there is plenty of pessimism that Nvidia's growth is slowing. But if that is really the case, then why are so many firms loading up on NVDA stock, and why are Wall Street analysts predicting that Nvidia will soar to new highs in the second half of 2025 based on some key information and developments? In this video, I will look at this and the latest news and analyze if Nvidia is actually slowing down at all, or is Nvidia still in its massive growth phase? Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. And I would really appreciate it if you could try to answer the question later in this video. Now let's get into it. Nvidia has announced that the company has invested in Bill Gates' nuclear venture, which is intended to power the future of AI and clean energy. Nvidia's investment firm, NV Ventures, is among the investors as Bill Gates-backed nuclear technology firm TerraPower raises $650 million to support the development of its natrium nuclear reactors. In other news, Nvidia and Foxconn are reportedly in advanced talks to introduce a fleet of AI-powered humanoid robots at Foxconn's upcoming manufacturing plant in Houston, Texas. If plans proceed, the first wave of these robots could be integrated into the factory's operations as early as the first quarter of 2026. Between Foxconn's upcoming plant in Texas, Nvidia's planned supercomputer in Taiwan, and their facilities that already exist around the world, it seems that Nvidia and Foxconn will continue to be AI innovation leaders for years to come. Nvidia's collaboration with Foxconn is significant for investors given it showcases demand for its Isaac robotic platform and Jetson AI chips. It reinforces that Nvidia will emerge as the foundational infrastructure layer as industries embrace automation for the next few years, making this venture strategically and financially meaningful for those invested in Nvidia's stock. Maybe Foxconn is a stock to buy right now. What do you think? The stock has dropped from its 2024 high of nearly $100 right down to around $50 in April 2025. But unlike other stocks which have already bounced back fully, Foxconn is still trading very low. Let me know your thoughts in the comments below. Of course, one thing that needs to be considered is the fact that Trump's tariffs that hammered the market in April could be back on the agenda very soon as we approach the end of the tariff pause on July 9th. Although some leading analysts predict that Trump won't raise tariffs once again on July 9th. But back to Nvidia, Barclays analyst Tom O'Malley expects continued AI demand to help Nvidia beat estimates in the second half of 2025. Barclays reiterated its overweight rating on Nvidia shares on Friday and raised its price target to $200, indicating that they could rally another 40% from current levels. But what do other analysts think? Looking at MarketBeat, we can see that Nvidia has a consensus price target of $173, which is actually 20% upside from the current price. But this is skewed by a low price target of $120, which is far below what anyone else is projecting. In fact, all recent price targets set in the past couple of months are far higher than this. Nvidia's latest price target was set in the past few days by Stephens, who have given the stock a $200 target. But just look at all these price targets. These are all far above the current price, and every analyst has been boosting their targets too, with the ratings ranging from $135 up to $210. So where will Nvidia be in 3 years? Now we all know how much Nvidia stock has boomed over the past few years. This has led Nvidia to be the world's largest company by market cap. It's funny because if you go back 10 years ago, or maybe as little as even 5 years ago, everybody knows who Microsoft is. Everybody knows about Apple, Amazon, Google, Facebook. These companies have been at the forefront for years as the world's largest companies. But go back just a few years and Nvidia was unknown to most, other than being known for its GPUs. Of course, Nvidia has been well known in gaming for decades, but outside of that, most people wouldn't have heard of the company until the past few years. And now the company is the largest in the world. And the consumer gaming side of the business now only accounts for a small fraction of its overall business. Nvidia has been at the forefront of a technology evolution, or even a tech revolution over the past few years, whichever way you want to view it. But can Nvidia maintain its momentum as the technology matures? First of all, Nvidia's growth is beginning to slow. Revenue jumped 69% year over year to $44.1 billion, but this is a sharp drop from the corresponding period last year when sales grew by 260%. As it says here, there are several reasons for this weakness. For starters, the Trump administration severely restricted export of the company's H20 chips to China, leading to a $4.5 billion impairment charge, as it had to write down the value of excess inventory and purchase agreements. And while the overall AI chip demand is still huge, there are some early signs that its specific business model could eventually hit a plateau. Now, the first thing to mention here is that there has not been a slowdown in growth. Yes, the revenue percentage growth has dropped year over year from 260 down to 69%, but that really paints a false narrative. Let's take a look at the figures for just a second. Revenue was $44 billion, an increase of $4.7 billion over the previous quarter, which itself was an increase of 4.3 on the quarter before that, and so on, so on. Looking back at the previous year, other than Nvidia's huge revenue jump last year from 7 to 13.5 billion in just one quarter, revenue has steadily been increasing by 4 to 5 billion every quarter for the past 7 quarters. And now revenue is still growing at the same rate despite the restricted exports of their H20 chips. Now, when a company is at the start of its growth stage and revenues begin to take off, these percentages can look amazing, but at a certain level, the numbers get far bigger, but the percentage increase looks less impressive. For example, let's jump back a couple of years to Q1 2023. Nvidia recorded year-over-year growth of 46%, with revenue going from 5.6 up to 8.2 billion in an entire year. That is an increase of just $2.5 billion of revenue in a whole year. But in the most recent quarter, Nvidia increased revenue by $4.7 billion in just one quarter. Whereas the increase of $2.5 billion in 2023 was a 67% increase, again for a full year, now a $4.7 billion increase is just 12%. So the percentage growth is down, but the actual growth is bigger than ever. Guys, if you enjoyed this type of analysis, then all I ask is that you like the video by smashing the thumbs up, and if you're new, then consider subscribing to the channel too. However, in addition to its incredible revenue growth, the company's margins have widened. In 2022, the company's gross margin stood at around 60%. Today, it's around 70%. So not only has Nvidia's revenue grown exponentially, but it is also more profitable than ever before. And their margins are far ahead of the company's traditional competitors like AMD and Intel. Now, the biggest risk to Nvidia is that their biggest customers could potentially become its rivals in AI chip design, giving them an incentive to replace its products wherever possible and making it crucial for the company to find business outside the private sector. And management is doing exactly that. The company is pioneering a concept it calls sovereign AI, which suggests that different parts of the world need to build their own large language models instead of relying on centralized sources. Over the long term, national governments could become a stable and reliable source for the business, even as the private sector becomes more competitive. So where will Nvidia stock be in the next 3 years? As we've seen with the growth percentages, Nvidia seems to be in that place where it is transitioning away from being an explosive growth stock into a mature value stock. But with forward price to earnings ratio of just 33, shares look reasonably priced, assuming the expansion of sovereign AI helps counteract the likely plateauing of the company's private sector chip business. Over the next 3 years, investors should expect slow but steady expansion. But guys, what do you think? Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and comment, and I'll catch you in the next